Hi, my name is Grant Mourre. I'm the president and CEO of SPC Nickel Corp. SPC Nickel Corp is a TSX-V listed company. Our focus is on nickel, primarily within the Sudbury Mining Camp in Ontario, Canada. Our flagship asset is our Lockerby East project, which we just recently had an announcement about with combining assets with Vale Canada. And we have other projects across Canada, but nickel is our primary focus.
Grant, thank you very much for the introduction. Nice to meet you. It's my first interview with SPC Nickel. It's a company I haven't come across before. Can you tell me about how it got started? Because I believe you haven't been listed that long. And what does the SPC stand for?
Well, the SPC really is kind of a combination of the previous name of the company. We used to operate as a private company, and we were called Sudbury Platinum Corp. So we condensed that, and when we took the company public. As I said, we operated as a private company from 2014 up until just almost 2 years ago, where we took the company public. So we're relatively new. We have been around for a while in the Sudbury area, but kind of new as a public company and just trying to get our name and our story out there.
Is this your first kind of rodeo as a public company CEO?
It is. Traditionally, I have been in the back as the exploration manager and the guy in the field. So this is my first step into the spotlight as the CEO.
Your team has grown when they see you coming, because they know within the field. Yeah. Good. And the last 2 years haven't been the easiest 2 years of the market. How's it been for you?
Yeah, I would agree with you. The markets have been up and down. I mean, things that are just unpredictable, from the pandemic to the war in Ukraine, things that you just can't plan ahead for. It has been a challenge, but our shareholders like our story, like what we're doing. We are following through with our plans, and we feel like we're growing and expanding this company.
2020 was a terrible year, and so much value was kind of lost in the sector. What price did you raise capital when you came to the markets in 2021?
At 20 cents. So we raised $8.7 million at the end of 2020, and we deployed most of that into exploration. We've since raised money last year, and we'll be probably looking to raise additional cash this year as well.
How much did you raise and at what price last year?
We raised about $3 million in flow through at around 15 cents.
We are where we are. Your market capitalization is just under $15 million Canadian. But you've put together this exploration package, and as you say, Lockerby East is your flagship asset. The news release that you've just put out talks about how you've got a deal with Vale on the asset, the other half of the asset. Could you just talk about the terms of the deal, please, to start off with?
Yeah, so it's a bit of a unique deal in compared to your traditional acquisitions. It's something that we've worked on for a very long time, over 12 months of discussions with Vale on this asset. It's not something that they do traditionally very often in Sudbury. I think over the last 25 years between Vale and formerly Inco, there's only been 2 deals done in Sudbury. And this one is a little bit unique to the other 2. But, what we realized in our discussions were that both companies owned half of an asset. And in order to really unlock the full potential of this asset, we needed to combine it into one. And both companies recognize that. This was not a core asset for Vale, as they have lots of other things going on in the basin. So they were in a position where they were going to allow SPC the opportunity to develop this asset, move it along, and hopefully move it towards a production stage. What do we get out of that? Well, we get at least the other half of our resource. Currently, right now, the resource stands at about 10 million tons on our property. So it's a shallow resource. It's close to surface. That equates to over 100 million pounds of contained nickel and around 75 million pounds of contained copper. The property that Vale holds, which is called the Crean Hill 3 property. We feel, there is historic drilling on it, not enough to complete an updated resource, but at least enough to give us a very good handle on what's there. And we feel that there is at least double to triple the resource on the other side of the property boundary. So we're starting to talk about a 200 to 300 million pounds of nickel contained resource. And, that's a fairly significant resource. It's an open pittable resource. It's right next door to infrastructure. And the big selling point for us is that under the terms of the deal, there's no cash or equity that Vale receives upon signing. So we're not paying anything up front for this resource. Where Vale is earning their interest is we've agreed upon a cooperation agreement where we are splitting the profits generated from the project down the road. And that's in the form of a net profits interest. So after the project is put into production, Vale receives a 37% interest in the net profits generated from the project. But
do they have to commit to any? Is that non-diluting?
Yes. But the caveat in there is that the net profits interest is not paid back until the project returns a positive NPV. So all of the capital that's put in from day one, so that's including the exploration drilling, the feasibility study costs, development costs, sustaining capital, mining costs, milling costs, smelting costs, all have to be reimbursed to SPC. And the project needs to return a positive NPV at an 8% discount rate before the NPI is triggered. So essentially that will be calculated on a quarterly basis. And if the project makes money at an 8% return, then Vale sees their NPI. If they don't, then they won't receive an NPI. And the point to get across is, we expect that Vale is contributing between a half and 2/3 of the contained metals to this resource. So those are metals that we didn't have to buy up front, and we're simply sharing the profits with Vale that come out at the end, and that could be many years down the road.
Nice. It's a bit akin to the kind of the oil industry, kind of a profit, a PSA.
Yeah. Yeah.
I don't understand the bit about the NPV8 and the positive, because once you've built it and once you've paid off the capital, surely there's just a kind of a net earnings figure, which of kind of the profit, which can then be split 37%, 63%, or where does the NPV8 come into play?
The way this deal is structured is after this deposit is put into production, on a quarterly basis, the NPV will be calculated back to day one. And if that NPV is positive, meaning that SPC has recouped its initial investment, and at an 8% return, so we've also earned 8% on top of that, then the NPI is triggered and Vale will be paid out for that profit earned in that quarter. The next quarter.
Day one being when you signed the deal, or
yes.
on the so the day one being last week or this week?
Day one being last week. Yes. So all of the exploration costs that are going to go into the project, all of the study costs related to feasibility, pre-feasibility, engineering, those are all costs that are factored into that NPV. So that NPV is calculated over time at an 8% rate. And once that is triggered at some point down the road, that's when Vale is paid their NPI 37%, and we end up with 63% of the profit.
Okay, I'd like to see that kind of. I'll have to kind of digest that, but the future value of money with the discount rate is very small, so the future cash flows are not huge. But okay, it's fine. I let's leave that there. I think I've got it. That there's also you have to commit to the minimum of pre-feasibility study by the middle of June or the end of June 2026, and a feasibility study by the end of June 2028. And at that point, you pay a bullet payment of $1 million Canadian.
Yes, and then we earn 100% of the mineral rights and the surface rights of the property.
Okay, good.
So all of the contained metal that is identified through the updating of the resource, we'll own 100% of that, which basically it was non-dilutive up front, but we simply had to go through the studies and complete the work during that time period.
It's work that you would be doing anyway, really. I mean, if it
Yeah.
was on a good. Quick question: what should I call this? Do I call this West Graham? Do I call it something Lockerby East? Do I call it Crean Hill 3? Have you got a name for the combined entity yet?
Yeah, it's a bit of a terminology is always a problem. The entire property is called Lockerby East.
Yeah.
This deposit is the West Graham deposit because there are other deposits on the property outside of this one.
So is it going to? So when you combine it with Cream Hill 3, is it going to be called just West Graham?
That's what we're going with. Yeah.
Okay, good. Okay, so let's talk about West Graham in its entirety. So you've drilled, or you've got historic resources on the eastern portion, which has been yours, and there has been a little bit of drilling, I think in the 60s and the 70s, perhaps, on the valley side of the tenement.
Yeah. So our property there was a resource put out in 2009, historic resource, and that was categories of indicated and inferred. That's just over 10 million tons. It is an open pittable resource. It has an average grade of about 0.6 nickel equivalents. So it's a little bit unique from Sudbury. Sudbury is typically your kind of massive sulfide deposits. This is a really thick, blebby sulfide deposit, which is somewhat unique for Sudbury, but it's also what makes it amenable by an open pit method is that the zone is pretty thick. It's up to 80 meters in thickness. It comes to surface. So our resource, like I said, has a strike length of about 300 meters, 350 meters. It comes within 40 meters of surface and extends down to about 500 meters in depth. The Crean Hill 3 property that we are adding was explored in the late 1950s, 1958 to 1960 is when Vale did, well, at that time it was Inco, did the drilling. It's very wide space drilling, so it's at 100 to 150 meter centers. From the drilling, I mean, that spacing is not enough to move it into to do an updated resource, so we have to do the infill drilling in between. But we do know that mineralization extends for another 600 meters on the Vale property that we are acquiring. So
hence, if you've got 350 meters and there's 600 meters on the other side, that's your estimate to double to possibly triple the. Same again, or possibly doubling the. Yeah.
Yeah, exactly, and that's the way that's the upside. So that means that a significant amount of the resource is actually coming from the Vale property.
Tell me a bit about the geology, because you've said it's kind of potentially 80 meters thick, and yet it's got a long strike and a dip. Is this strata bound? Is it some kind of formation which has got preferential or kind of has got sulfides in it? Is it a structural zone? What are we looking at? Yeah,
so typically in Sudbury, you are dealing with massive sulfide that sits at the base of what's called the Sudbury Basin. This is more of a conformable zone that is just slightly up dip or above this basal contact. So it's essentially a very homogeneous sheet that is up to 80 meters thick, and in this case, is probably has a strike length of over 900 meters and extends down at depth to at least 500 meters. And it's very consistent. The grades are very consistent across. There is a higher grade core within the deposit that gets closer to 1%. And really another thing that is of interest to note is that the grade of this deposit actually gets better as you move towards the property boundary. So that was something that for us was really attractive, is that the best grade mineralization where we're getting values of 30, 40 meters of 1% nickel occur right at the property boundary. So we're confident that that this mineralization, this higher grade mineralization, will extend over the boundary, and that can have a big impact on the overall grade of the resource.
When you talk about there being a higher grade core, are you talking about, is it kind of within a lithology, and it's the high grade is in the central portion of that lithology, or is there some kind of controlling feature in the middle of the plane of the ore body?
Yeah, typically, we have this 80-meter thick zone, and in the middle towards the base is this higher grade zone. So there's an envelope, there's a higher grade core with an envelope of slightly lower grade material around this. And really, when you look at the geology, the rocks, there's not really a good stratigraphic control on why that is. It's something that we're working on and trying to figure out, but it does seem to be quite consistent across the deposit that you do see this higher grade core. We believe that it has something to do with these controls of the shape and the morphology of the base, the contact. So how the shape, in Sudbury, a lot of the mineralization is contained within what's called embayments. So these would be depressions within the base of the Sudbury contact. And that's what we feel might be controlling these higher grade sections.
You say it's visible kind of minus 40 meters on your property. Does it reach surface on the Cream Hill side of things?
Yes, and that's the other attractive part of this property, is that you can walk probably 10 to 15 meters across the property boundary and you're standing on the mineralized zone. So it outcrops on surface. So when you start to think about open pit design, then you can start bringing in the idea of a starter pit that gets right into your higher grade mineralization that you can later expand. And that's one of the attractive nature of this combining this asset. Before, we were not able to evaluate our deposit by an open pit because of this property boundary. Given the pit walls and needing to leave a boundary, a pillar, that really eliminated that potential of looking at that low cost mining techniques of an open pit. Now removing this opens up the entire area for a potential large open pit down to where we think it down to maybe 400 meters depth.
Well, you think the pit could potentially pull that far down?
Yeah.
Early days yet, but it's good to be thinking that way. What about the mineralogy? Is it pentlandite? Is it a nickel sulfide that processes easily? Is there any oxidation? Is there glacial till? Tell me a bit about what the processing probabilities are pointing towards.
Yeah, I mean, it's actually another strong characteristic of this deposit is that it's got a very simple mineralogy. You are essentially dealing with nickel and copper. All the value comes from those two elements, as well as a little bit of cobalt. This deposit is not high in the precious metals. It does have silver, but not platinum and palladium gold, which traditionally in Sudbury have been a little harder to recover in the mills. So this is a very simple nickel copper deposit. It's pentlandite and chalcopyrite. So, and because it has very high nickel tenors, which makes it very attractive in the mills, and we feel like it can produce, have very good recoveries and produce a good concentrate. Nickel tenors range from about 6 to 8, which is fairly high for Sudbury.
And any oxidation transition material at the surface?
No. It's a very simple, kind of boring rock that hosts this. And overall, there's maybe 5 to 10% Levy sulfide is the mineralized zone. So it's not a massive sulfide zone. It is a high tenor nickel copper system.
Okay, interesting. And is what's the host rock? Is it hard? I mean, it's probably too early to say, but have you done any bond work tests on it? I mean, do you know if it just kind of it's super abrasive, or if it's actually less hard and more amenable to processing or grinding? Well,
the host rock is what's called a norite, and it is the host rock for all of the ore in Sudbury. So Sudbury's got 130 years of mining history. This material should behave no differently than anything else that has been processed over that time. So it should behave well within the existing mills in town, and also the experience that people have in processing this material should be, it should work well.
And I don't know the detail. I don't know much at all. But tell me about the opportunity for using existing mills in Sudbury. I mean, could you? Is there a possibility that you could potentially toll treat this or come to an arrangement with the mill to avoid you having to build the plant?
Yeah, that optionality is there for us. So, if the economics proved it, we could conceivably build a mill for ourselves and to process this material. This property is right next door to all infrastructure, power, water, natural gas. We're about 5 or 6 kilometers from the Trans-Canada Highway. You can road access to the site, and we are within less than 40 kilometers from the Vale mill and the Glencore mill. So that at this point in time have capacity. So infrastructure is there. Certainly toll milling at one of the mills in town are certainly an option for us.
Okay, so you'll be able to put that into your option studies and look at the trade-offs between trucking and economics and commercial terms relative to building your own. Great! What a good deal. That sounds really exciting. Did the market? I kind of know the answer to this, but did the market greet you with fanfare and toots and streamers, and did you get a huge reward in your share price?
Not as much as we'd hoped, if I'm being honest. I think our existing shareholders are very happy with the deal that we've done, and I think people that are familiar with Sudbury and the nickel market know how challenging it is to make a deal with a company like Vale. So I think for that's a huge accomplishment for us. And it's, like I said, it's only happened twice in the last 25 years. So, we're within a small group. I think one of the problems is that the deal is not traditional. It's not a traditional cash and shares up front for an asset. It is a profit sharing cooperation agreement where, there is no exchange of capital up front. It is all based on the profits that will be generated from the project at some point down the road. And I think it's just a little bit of a different deal that not everyone is used to, but I think when you kind of think through the process, you realize that it does give us a lot of flexibility. It allows us to, and in fact, it's a good deal for both groups. I mean, it allows SPC the ability to recuperate all of its capital that goes into this project from day one, plus return an 8% return on our investment. And really, at the end of the day, if we're paying Vale a NPI of 37%, that means SPC is earning 63% of the profits on a deposit which we may only have initially had 1/3 of or a half of. So, for us, that is a good deal, and really the sum of these two parts is bigger than the individual. So without combining these two assets together, probably neither company would have been able to do anything with that asset. So this is the path forward to what we hope is, the next steps for SPC, which is to move away from being just a straight exploration company into hopefully being a new producer in what is arguably the best nickel camp in the world.
Was the deal flagged beforehand? I mean, I know you've been working on it for 12 months, but when you came to market and you did your initial capital raise and when you did your subsequent capital raise, was this something that was on the table, or is this something that you've been able to produce and say, look, I've actually delivered effectively a resource drillable deposit?
Really for that 12 months, we haven't been really able to discuss it with anyone, which has been a bit of a challenge because we knew we were getting close and would eventually get this signed, but it was not something that we were able to share with shareholders or potential investors. We could hint at what we were trying to do, and that was to expand in Sudbury, and anyone that looked at our presentations would know that asset next door was probably pretty key, but we weren't really able to socialize this with anyone. So this is kind of our first crack at getting this story out and introducing it to our shareholder base and also potential investors.
Tell me a little bit about your shareholder base. Have you got any people who are absolutely into nickel or kind of institutions, what does your shareholder register look like?
Yeah, a lot of we have a handful of major shareholders, some of those being groups like Dundee Goodman, which is based out of Toronto. RCF Capital is another group that is supportive of us. And a lot of these companies are also involved with some of the other nickel companies that are being active right now. So, I think we're being looked at as one of the few junior kind of listed nickel companies on the TSX that is kind of, we feel, moving in the right direction. And now we're actually moving away from being just an exploration company and moving to look to advance an asset towards production state.
How much of your budget for this year is going to still be on the other exploration, or does that all kind of slightly fall by the wayside and this becomes front and center?
Yeah, I would say we have three other projects across Canada, another asset in Sudbury, and one just outside of Sudbury, and then one in northern Canada. Most of our focus is going to be entirely on this West Graham Crean Hill 3 opportunity, and that's where most of our efforts and our exploration budget will be going. We still really like our camp scale nickel project that we've got up in Nunavut, and that's something that has garnered a lot of attention from some potential partners. So that's a project that we strongly believe in, but given where it is located, we would like to bring a partner in to help us advance that project and really stay focused on growing the company around this asset in Sudbury, which is really just easy to work given where it is located.
Yeah, makes sense. Retain a carried interest or sell your non-core portfolio. Focus on your existing on your core asset, West Graham. Good. How much money have you got, and how will you and what do you plan to do now? Presumably, it's drill, baby, drill.
Yes. So I think our current treasury is around $3 million. The objective for 2023 will be to produce an updated resource of the combined property. And I think once we do that, that will really show the market what the opportunity is and really show the market what we are getting out of this deal with Vale. So that's our number one priority, is to get an updated resource. So that'll include a lot of drilling this year, anywhere from the 20 to 30,000 meters that we'll have to initiate here soon. And that's what we're working towards, is getting the drills out in the field and getting them turning. We will have to do some additional financing this year, and that's something that we're looking at right now. But most of our existing shareholders are very supportive, so we feel like we'll have certainly have them back into the next financings.
Good. Just in terms of you talk about 20 to 30,000 meters of drilling. From what you know of West Graham already, to get an inferred resource, what are you able to do in terms of drill spacing? Is it consistent enough for you to be able to space the holes, 40 or 50 meters apart, or is the variability so high that you have to come in closer?
That's something that we're working on with the engineering group. We feel like there's not a lot of variability in this deposit, and it's fairly consistent. So, I think traditionally in Sudbury, 40-meter spacings has been sufficient. So, but we're going to make sure that we, the nice thing for us is we have the West Graham resource, which is, has already had a 43-101 report done on it in 2009. So we can use that to see and transfer that over to the Crean Hill property to see what spacings we have to drill at. But we're kind of expecting in that 30 to 40 meter centers that we'll have to drill. And
is there anybody in your team that was involved in that prior resource work?
No, that was before us. I mean, my team is mainly ex Falconbridge and Xstrata and Glencore individuals, as well as people that were involved with one of the first deals that was done with Inco or /Vale in the early 2000s, which was with FNX Mining. So one of our directors was one of the main persons involved with that deal that resulted in building a really great success story in Sudbury that's still going 20 plus years later.
You've been in the industry all your life, or for the majority of your working life has been in nickel. Have you done this transition from deposit through to production, or are you, how far downstream do you go?
No, is the answer. I've been involved in the discovery resource stage, and then I was involved with some discoveries in Falconbridge that, in that case, it gets handed off to the engineering department after the exploration group, proves up the resource, it moves off. So, I have been involved in some of the building of some of the mines in Sudbury, but this will be my first shot at, taking a project from the exploration resource through to hopefully a development and production stage. But I've got a good, strong team behind me and my board of directors that have done this before in Sudbury, so I lean on them a lot for help.
Excellent. Well, I wish you all luck with it. It sounds as if you've got a tiger by the tail, in the sense that you and I both know that exploration is such a high risk business that actually finding an economic deposit is such a rare occurrence. And so to have something which has got simple metallurgy, close to surface, close to infrastructure, decent grade, it's something really to get your teeth into, isn't it?
Yes, I mean, nickel. Anyone that's been in the nickel business knows that it's up there as one of the most challenging deposits to find. There's not a lot of new nickel deposits that come online, so being in an established camp with all of that history and all of the infrastructure is a huge advantage for us.
Open pitable as well, because the typical morphology of nickel sulfides are kind of narrow vein underground, kind of subvertical, very inconsistent along strike and depth. It can be quite a challenging metal to put a reserve around. Whereas if you can get a large bulk tonnage to a degree, I mean, 80 meters isn't huge, but essentially it's a bulk tonnage target that you're looking at. It's a massive advantage.
Yes. Yeah.
Good. So what's the work plan? What's the next 6 months look like in terms of news flow?
It'll be drilling. That'll be the plan for at least the next 6 months. So we should have a continuous stream of drill results coming out as we work towards building a new kind of global resource of the property.
You said you're working towards getting the rigs turning. How many are you thinking, and when will they be deployed?
We'll probably initially start with 1 and ramp up to 2. These are all very short holes, so it moves really quick, and it'll be a challenge for the technical team to stay on top of the mountain of core that'll be coming out of the ground.
Diamond?
Yeah.
Good. And will you be doing a little bit of logging yourself to keep your eye in, or have you not got time for that these days?
You know what? I like to try to stay involved as much as I can. I don't know if I'll be logging any drill holes, but I certainly like to keep an eye on the geology, because at heart I'm an exploration geologist, and I've spent a lot of time on Sudbury in the past, and it's a deposit that still always fascinates me, and anytime I can look at some Sudbury rocks, I take the opportunity. And
there's also the fact that you've probably got the greatest amount of experience on this geology, and by coming in on a weekly basis or once a fortnight, however frequently it is, you'll be bringing not only experience but also fresh perspective, because you're not going to be so close to it that you can't see the wood for the trees, so to speak.
Yeah. I don't want to micromanage the group, but I'm probably in there every day, getting in their way, looking at drill core. So, but now with this project, I'll probably have to spend a little bit more time at the desk in front of the computer.
Yeah, I think your team is going to have to remind you to get on with the marketing, Grant. Get on with the marketing. Go and raise the money. Just leave us alone for a bit.
Yes, I think so.
Good. Well, thank you very much. It's been a really useful introduction to the company. I'll certainly put it on the watch list, and do come back when you've got some drill core from Cream Hill 3. Presumably you're going to be doing petrographic studies as well, and just that all of the low cost but important work that will help you advance to a better understanding of the deposit.
Yeah, it makes more sense to do it right now instead of having to come back later and do it. So, yeah.
Yeah. Good. Thank you very much.
Thank you.